Hi and welcome back to my channel. It's Caroline here. Today I'm going to be speaking about something really important because it concerns your or your family's life savings. And the reality is there are so many people out there trying to get their hands on them by unscrupulous methods. Now, the BBC reports that £1 billion are lost every single year to schemes, investment schemes that fail. And that's not including the fake scamming investment opportunities. The sad truth is that scams are everywhere. It's terrifying to think that your loved one's savings can disappear with a few seemingly innocuous clicks of the computer. I'm here to try and prevent that happening. And the first step in aiding prevention is to know what these scams or unregulated investment opportunities look like. Firstly, I want to talk about scams. So these are not real investment opportunities, but they're carried out by criminals using what's called clone companies. So criminals are targeting ordinary retail investors online or through ads or other mechanisms, pretending to be an actual investment firm, and usually a very well trusted one. The offer can look very tempting, as it can be like a high interest offer, and understandably people believe them because these people are impersonating real companies that an ordinary person in the street would trust. But the fact is, these are not these companies. Instead, it's an individual or a group of individuals impersonating the brand, even with contact options closely imitating the real company's contact details. So for instance, phone or email address. Now, a straightforward and quick way to verify the specific offer is to contact the actual investment company, but do not use the phone number or the email address listed on the offer. This is mistake number one. Instead, go online and search the company's verified email address or contact number via the Financial Conduct Authority's website. Now, so just Google Financial Conduct Authority and then go to their register. Now, sometimes there can even be a warning on the FCA's page, of that company page, saying that there are individuals impersonating them with scams if it's been brought to the attention of the firm and the FCA. Even if there's no warning on the FCA, still contact the company using the verified details of the regulated firm. Like, reach out to them directly and do not invest any money unless the company confirms, either on a recorded line or in writing, that the distinct offer and all its specifications, including any amounts, is actually legitimate. Now, in my experience, high interest offering retail products are rarely genuine. Now, it's also worth visiting the legitimate company website, again, accessed via the FCA register, because there could be a notice on that website warning you of a scam that is operating currently. Unfortunately, I have dealt with individuals who did not take these steps and have lost a lot, if not all of their savings, to clone companies and fake investment opportunities. Like in this instance, they are advised to contact the police, but the issue here is it's notoriously difficult for the police to track the perpetrators down. Now, this is because the correspondence normally takes place via email, where the criminals are using a VPN, which is an internet address from anywhere in the world of their choosing, which makes them near impossible to trace. Similarly, these criminals can purchase a phone number registered anywhere in the world, so you can speak to someone thinking that they're in London, but they could be many miles away in a completely different country on the different side of the world. And that's a bit scary and just makes it near impossible to track down. Now, another form used to target retail investors, and it's arguably as dangerous as clone companies, they're unregulated but legitimate investment companies offering attractive but unregulated products, such as bonds or other illiquid assets, or even regulated companies selling unregulated products, such as bonds. Now, these firms do not have the permissions to target retail investors who cannot fully comprehend the risk of these investments and cannot afford to lose all the money that they've invested should they fail. Now, you might be asking, why is it important that both the company and the product are regulated? So listed on the FCA's register or list of both companies and funds? Well, there are protections for these products under the Financial Services and Compensation Scheme, which will guarantee your investments up to £85,000 should the investment fail. Now, an example of a regulated firm or product that had that happen was Neil Woodford's company and the flagship Woodford Fund, which saw 300,000 investors lose up to 1 billion. However, given both the fund and the firm were regulated, investors will, although it's taking ages, get their money back up to £85,000 via the Financial Services Compensation Scheme. Now, if you're considering investing in a product of a regulated entity, you should always check whether the product itself is listed on the FCA's fund register. Google it, you'll be brought to the FCA and search fund register. Now, an example of a case where a regulated firm sold unregulated products was London Capital and Finance, which sold unregulated mini bonds, which resulted in 11,000 investors losing £237 million. So although the firm was regulated by the FCA, the mini bonds were not, and they were not listed on the FCA's regulated products. So these bonds should never have been sold to retail investors who could not reasonably comprehend the risk involved. And the absence of regulation over the product meant that the protections under the FSCS did not exist. Now, while there is an official inquiry over LCF's actions in targeting retail consumers, many have lost their money, and there's no direct guarantee that they're ever going to get any of this money back. Now, an example of an unregulated investment firm which should never have targeted retail unsophisticated investors is the Blackmore bond. And now that might ring a bell, and maybe it should, because it's been the subject of a BBC Panorama episode entitled The £1 Billion Savings Scandal. And that's available to watch on iPlayer, and it's a good watch, but it's very hard to watch given the genuine normal working individuals who lost a combined 45 million to an unregulated bond based in Manchester, which positioned itself as a lucrative real estate investment opportunity. Now, as this was an unregulated company selling an unregulated product, there is little chance that any of the investors will get any of their money back, given the product failed with no government protections via the Financial Services Compensation Scheme. Now, I cannot stress enough that danger to individuals is real. Please follow the steps I've outlined, namely check the FCA website, ring the actual contact number of the regulated firm. Do not invest in any unregulated product without protections unless you can afford to really afford to lose all the money you invest, because it is high risk. Now, failing to follow these pieces of advice can have a huge impact to the quality of life, so please do me a favor and follow them. Thank you all so much for watching. Please subscribe for more. Let me know and comment below if you found this helpful, or if you know anybody who's been impacted by scams or failing risky, dodgy investments. Thank you so much for watching. Take care.